Hello, welcome to Property Point, our final episode for 2017, and I'm joined by Nerida Conisbee from REA Group.
Thanks for having me.
Hi Nerida. Nerida, being the last episode for 2017, I really just wanted to wrap up this year, if that's possible. It's been an interesting year for the property market, hasn't it?
Yeah, look, it has been interesting, and we're certainly finishing the year on quite a different note to where we were last year. The market's slowed. We haven't had any interest rate cuts this year. If anything, interest rates for mortgages have increased over the year, and we've really had a strong pullback of investors. So we are sitting in quite a different position, end of 2017 than the end of 2016.
At the start of this year, would we have thought that the market was going to go this way? There was a lot of people, for a long time have been saying that the property market's been going too strongly and needs a correction. I guess many of us were thinking, the fundamentals aren't really there for a correction, but it has happened, hasn't it?
Yeah, look, it has happened, and towards the end of last year, we started to see a little bit more shaky behaviour on site. That we see a very strong correlation to when interest rates are cut, we see a surge of activity on the site. And towards December, and then moving into early 2017, we started to see demand fluctuate a little bit from month to month. So it started to look a bit shaky, but it's still very strong, and demand still continued to remain strong. Towards the end of this year, though, we really started to see Sydney slow down, and particularly Sydney apartments slow down. So it really started to kick in towards the end of the year.
And is a lot of that to do with the moves by APRA to cut back on the amount of interest-only loans that the banks can do?
Yeah, look, it's impacting investors the most. If you have a look at trying to borrow as an investor, it's getting more expensive. Banks are making it more difficult. Interest rates in the US are going up, so that's getting passed back to mortgage holders. So there's lots of things that are happening, but really that investor sentiment has changed. And, if you have a look at the end of last year, investors were really still flocking into housing, and particularly apartments. End of this year, we are starting to see a real change in the way that investors are looking at property.
Now, as we've spoken about many times, the market is not just a single market, it's many markets, markets within markets often. What have been the strongest markets and the weakest markets over 2017?
Well, it was really all about Sydney and Melbourne this year. Hobart started to really kick up as well. So by the end of the year, Hobart was actually the strongest in terms of price growth year on year. It was the strongest on our site year on year. So Hobart was a really, really positive story. Darwin, Perth, all the mining towns started off quite badly during the year, but by the end of the year, we are now starting to see a little bit of sustained growth on our site. So that's starting to flow through to pricing, particularly premium suburbs in those cities are doing quite well at the moment, although price growth overall is still going backwards. So, it has been a Sydney-Melbourne story. It's no longer such a strong Sydney-Melbourne story, but we are starting to see early signs of growth in Perth in particular. Melbourne
seems to have held its ground reasonably well. We know that Sydney has lost a bit of ground.
Yeah, look, Melbourne it always surprises on the upside that we always see Melbourne property market in particular, whether we're looking at commercial or whether we're looking at residential, hold its own. A lot of Melbourne's success has to do with the fact that it's remained pretty affordable, that if you are an investor wanting to put money into Melbourne, you can buy at that sort of $500,000 price point. If you're a first home buyer, you can still buy things. It's a very strong comparison to Sydney, where we know Sydney investors are looking at Melbourne very strongly, and as a result, Sydney seems to be struggling as a result. So Sydney's pricing is the challenge. It's, if you have a look at the average apartment, you're looking at $200,000 or $300,000 more in Sydney compared to Melbourne, and that seems to be impacting demand.
The other thing we've seen is the outflows to some of the regional towns, and I was quite surprised to see the prices in some of the regional cities like Newcastle skyrocketing.
Yeah, look, some regional areas are doing really well. The ones that are obviously doing well are those within commuting distance of Sydney. So Central Coast, Wollongong have been doing very well. Newcastle's a bit different. It's not really within commuting distance, but the city's doing pretty well. We've got pretty strong economic growth there. Albury's another one. We've seen pretty strong price growth in Albury. Geelong, Geelong's probably similar to Central Coast and Wollongong, that it's within commuting distance of Melbourne, and as a result, it's doing pretty well.
Well, we'll leave it there for today, Nerida.
Thanks for having me.
When we catch up in the new year, we can talk about the outlook for 2018.
Sounds great.
Thanks for joining us on Property Point.